Nick Hodge here with Daily Profit Cycle. It's Thursday, September 23rd. A lot to talk about in the markets this week. But first, I want to dive into it with a little bit of context. So you'll know that I manage millions of my own dollars on my own across multiple portfolios, across multiple durations, across multiple financial instruments, from large cap equities and funds that track the entire market or large sectors, S&P sectors of the market, all the way down to these speculations, private investments, where I will write a check directly to a company while it's still private ahead of an IPO. Have made money all sorts of ways, have seen several cycles at this point, and have to apologize sometimes when I get jaded with the financial news or have to entertain other people's narratives or opinions about the market, or also when I have to, I think, manage expectations or take with a grain of salt other videos like this and other input that I see in the market about smaller speculations, because I know that they're coming from people who are doing what my mentor taught me is playing with toothpicks. So the crypto crowd is an easy one to pick on there, but you'll see a lot of crypto videos, get in this coin, this altcoin, it's going to the moon. I made money from it. You should invest in it as well. And it's like, yeah, but that's sort of playing with toothpicks, because what do you have, like all your entire portfolio in that one coin? Are you, do you have a meaningful enough amount invested in that one thing you're talking about to actually move the needle? Is this a new thing that you're talking about, or have you been managing your dollars for several years throughout cycles that come and go? And so, sort of two things I wanted to talk about in this video. One is this week. It's about the sell-off we had this week. On Monday, we had the worst down day in the Dow Jones in 6 months. Stock market, quote unquote, stock market. The Dow Jones, which isn't the stock market, it's just an index in the stock market. But anyway, was down about 1,000 points at its worst on Monday, and then bounced back sort of towards the end of the day. But, all throughout Monday, we were seeing these headlines about global contagion and why this was the start of a 20% correction or sell-off in the market. And this was the end of the bear market, or the end of the bull market. And it's going to be a recession and, this and that. And so, I calmly sent emails out to my subscribers for those who have a longer term approach and invest more in funds and large cap companies. I said, look, this is nothing but a buying opportunity. We've seen dips in the past previous months. And while this dip is a little bit more steep or staunch than we've seen previously, all the other indicators that I watch and that I tell members, subscribers about, weren't, sending up red flags. Things like the dollar index, the volatility index, bond yields, and then certain equities that I watch. They weren't, giving me indications that the sell-off earlier this week was going to metastasize or materialize into something bigger. And so I told those folks, all my advice of late still stands. And I gave them a couple specific things that they could buy the dip on, right? If you're patient and have cash and sit on the sideline, days like Monday are nothing but, sales at TJ Maxx, right? So you go and get your items on sale. We picked up some industrials, some tech names, and some quality gold producers, royalty companies. Yeah, lovely. They all bounced back. And then the other thing I did was, to my more speculative folks, shorter term duration, I sent out a note to saying, look, you're getting a sell-off today. We've been looking for new trades. One of the names I'd been watching was Playboy, and that's the first chart here on the screen today. One of the names I've been watching is Playboy. It came public via a SPAC this year, ran to like $63 earlier this year. The whole SPAC crash happened. I don't know if you were in tune with that or not, but all these SPACs came back to their sort of $10 or near their $10 starting price. Playboy had held up relatively well because it's an actual real business with real management, and one of the reasons I've continued to watch it is because they're getting into the NFT space, the non-fungible token space, which is a space I'm interested in as a longtime holder of Bitcoin and someone who's invested in crypto mining assets and has been following the cryptocurrency space for the better part of 8 years now. I'm getting old. And Playboy, melted down with everything else on Monday. It dipped, well below $22, and I watch the ticker as I do. And when it got to a level of below what I thought was support, but still above resistance, I'm getting a bit technical now. But anyway, it got below a price where I thought it was a good buy, and holding up above a price that I didn't think it was going to go below. And so I sent an email to subscribers saying, look, we should buy some Playboy today down below $21.50. I've been watching it for a while. XYZ, all the things I just told you. Let's go ahead and pick up some Playboy. And then lo and behold, right, it wasn't the end of the world on Monday. This is Monday, the end of the world. Tuesday, sort of, just sideways. The world's still not ending. And then when we really know, the market finally figures out that the world isn't going to really end. On Wednesday, you get a 10 to 12% lift in the stock in a single day. 10 to 12%. Just for comparison, for people who maybe don't invest that much or who don't know like what a good return is over specific durations, the stock market on average goes up like 8% a year, 7 to 10% a year. And so we just banked, 10% trade in 2 days. Bond yields, 10%, 10-year bonds right now are yielding like 1.3%. So 1.3% in 10 years. And we just did the 10 to 12% trade in 2 days just by not panicking when everybody else saw a bunch of red and doesn't know how to analyze and think for themselves. And so thinking for themselves is the second part of this little mini TED Talk I'm giving today. This is the commodity index up here. It holds things like, oil, gas, corn, copper, soy, things you eat, things you need for your everyday life. This is the stock market as evidenced by the S&P 500. And these are the greenbacks that you put in your pocket, the US dollar. And so this is a 1-year chart. Zooming out to a year now because I got a text this morning from one of my buddies. It was an article in Bloomberg that said the metals needed for the clean energy revolution are gonna make people rich or create millionaires or whatever. And I texted him back, what a novel idea, man. And of course I was being facetious because I've been investing in the energies, in the metals needed for the clean energy transition for again, years and years and years. I'm getting old now. I was financing private lithium startup companies in 2015. For example, I wrote Energy Investing for Dummies in, 2013. And so, this is a trend that I've been on for a while. And again, I get jaded when I see articles like this because like Bloomberg paid subscription is coming out with an article today about how you can invest in these metals necessary for the clean energy transition, copper, nickel, lithium, rare earths, hey, you name it, right? And so a couple of things I wanted to talk about regarding that. One, I've literally made millions of dollars in financing the metals necessary for the clean energy transition. And the subscribers that have followed me along in that journey have as well. And the other thing I want to talk about as it relates to those metals prices is inflation, because you see here that commodities index is up more than 50% in the past year. 50. I just told you that the stock market goes up 7 to 10% a year. And here the stock market you see is up 30% in the past year. So you have inflation running rampant, not only in the stock market, which is up, 3 times higher than it normally goes in a year, but the commodities up 50% in a year. And you have the government telling you there's no inflation. And that, of course, is a flat out lie or bullshit. Your dollar, of course, is not getting any stronger. Your dollar has, in fact, lost value below 0% over the past year. And so that thinking for yourself is something that's always in the fore for me. I know everybody is not investing all the time and, doing all the things that I do, trading, Playboy, financing private companies, doing the S&P sector stuff. But you really don't have to, I guess is my point. And so, while I'll continue to finance the green metal companies, where the inflation, the commodity inflation is outpacing the broader stock market, you can do that as well. And you don't have to do it by, being glued to a screen or even checking your email every day. What I'm going to say here is, the main service, the largest service I write, is a monthly service. It's cheap. It's $100 a year. And I email once a month. You get a full issue with the moves that you should make for that month, what's coming in the month ahead, the cycle, and how to play it. And you'll be positioned the same way that I'm positioned, using larger funds. And I was writing last week about how, sort of to keep me honest and to allow me to have something to measure myself against, measure the money that I manage myself against. I've given a professional money manager $500,000. And I was writing about how a couple of months ago I emailed him because, their allocations are basically all wrong. They were allocated 25% in tech when, energy and real estate and industrials have been some of the best performing S&P sectors of the year. And the professional investor, the money manager, had me less allocated to those sectors that were outperforming, that were out inflating. And I emailed him and I just get back like some, boilerplate gobbledygook, like, oh, we don't rotate into sectors. We don't think about rotation that way. And it's like, yeah, but that's how you outperform the market. And so that's what I try to tell to individual investors. It doesn't have to be, wizard behind the curtain stuff. It's not in a black box how to outperform the market and invest in things that can drive your bottom line and make investing easier and more profitable and more fun for you. I was texting my buddy back about the green energy metals. Wait till they find out they got to burn coal to make the steel for the wind turbines. Some of these truths are so simple, like my partner said recently, that you can get rich from them. And the main truth that I've used to get rich is that you can't build electric vehicles and batteries and solar panels and wind turbines without a fuck ton, and that's a technical term, of copper and rare earth magnets and silver and zinc and on down the list of those things. And I won't get into further how they're mined, et cetera, because that's beyond the scope of this thing. But the point is that if we're throwing trillions of dollars at a clean energy transition and we got to take all these commodities out of the ground, and the government is printing money to effectuate its plans, then the raw inputs for those things are going to inflate in price. And all you have to do is buy those things in your account to have your account inflate alongside them, whether you do it with funds, whether you do it with large cap companies, or whether you speculate in risky startups like I do. I, of course, cover all those things for subscribers of all stripes, and they can choose. But what I would recommend is taking a look at this month's issue of Foundational Profits, several recommendations in there, including how to bank this inflation that's going on right now. And I'll put a link to a preview of that issue underneath this video, so you can check it out for yourself and hopefully cut through a bit of the bullshit and the noise that you here out there on Wall Street and with other talking heads. So if this video made sense to you, if you understand what I'm talking about and you want to learn more, I urge you to click that link underneath and check out the most recent issue of Foundational Profits. And of course, all the other research, blog posts, articles, podcasts, etc. we publish around here. Nick Hodge signing off for Daily Profit Cycle.